Hello, everyone. Today on the Final Bar, I'll be talking with Mish Schneider of MarketGauge here on Valentine's Day, February 14th. We'll talk about the markets chopping around, regaining some of those early losses from the morning, getting back up to flat for the day into the close. Ladies and gentlemen, this is the Final Bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets using the power of StockCharts. Our StockCharts platform was launched over 20 years ago by Chip Anderson as a way to empower investors to better understand the markets using the best practices of technical analysis. And people like John Murphy and Martin Pring and Larry Williams and Arthur Hill and Tom Boley and many others have helped us refine this visual toolkit to help us quantify investor psychology and focus on the message that the markets are providing back to us. On a day like today, it's really a choppy day. At the end, the S&P really unchanged from where we closed the day on Monday. So we have to think about what did we learn, right? And think about some of the sector movements. So for example, consumer discretionary up while REITs and consumer staples down. Thinking about individual stocks, areas like Tesla, like NVDA having a nice move to the upside. A lot of industrial names, a lot of aerospace names moving higher. We'll get through some of those here in our market recap. As we move on here with the market recap, I do want to start with a poll. We asked you recently on our live stream page at StockCharts.com and also on our social media accounts. So follow us on Twitter, subscribe to our YouTube channel. You won't miss a poll. We asked you recently, know your technical indicators. Which type of moving average is skewed the most to recent price action? Only 14% of you said a simple moving average, and you're correct. It's not that one. And I think that's an important lesson because that actually equally weights what happened yesterday and what happened 49 or 149 days ago are weighted the exact same. That is one of the benefits of the exponential moving average, which 81% of you absolutely correctly got. It's weighted more to the more recent price data and as an exponential smoothing factor, which is the way of just adding new information, but continuing to weight the previous series. That's why most trend following models, including the market trend model that we talk about, usually on Friday's show, is driven all on exponential moving averages. If you want to learn more about moving averages, the different types and their strengths and weaknesses, and when you may want to opt for one or the other, click on the magnifying glass in the upper right corner of our site, type moving average, and you'll get all sorts of great chart school articles to help you along the way. Let's continue on with our market recap. As I mentioned, sort of an unchanged day from yesterday for the S&P, almost flat, finishing the day at 4136. Dow down about 0.5%. The NASDAQ composite up just over 0.5%. The NASDAQ 100, the best performer on our front page here, up 0.7%. The VIX is now well below 20, and that's maybe an interesting data point to focus on because one of the things we've been observing here after that initial run at the beginning of the new year, we sort of settled into a lower volatility move. And that was what differentiated really the fourth quarter of last year, which was the bounce off the October lows, sort of the volatility remaining fairly elevated, but then it's starting to go below 20. Then recently here in the last couple of weeks, you saw the volatility pop up a little bit, the VIX back above 20. Today, we're actually right back below, just below 19. So keep an eye on that because one of the, I guess, the bullish case for stocks, one of those bullet points, I would argue most likely would be lower volatility, probably the VIX remaining fairly low, ideally below 20. Also, high yield spreads remaining fairly negative, right? You saw a bit of a widening in spreads earlier in the week, coming back up to the upside, most likely today. Elsewhere, with some of the other asset classes, we have interest rates here. The 10-year yield up to around 376. Long bond yields around 380. Now, what's interesting here is you saw rates move higher. We had the latest CPI data this morning, and then some interesting comments from Fed governors. I feel like on the same day you have Some sort of hinting that the finish line is getting further away, others hinting that it might be getting closer. I think there's a lesson there to not pay too much attention to each of those individual comments, but think more about the bigger picture and what that might mean. Market's taking this as a bearish sign for stocks or for bonds, not in a big way, but in a little way, and that's pushing rates higher just a little bit. Dollar index, not much of a change from yesterday, which may be important to watch as well. Commodities, to be honest, fairly mixed here. You had gold basically flat for the day. The general commodity ETF we tracked, the DBC, was up about 0.33%. Silver prices moving back lower. Natural gas moving higher in a pretty decent way. That's the UNG that was up over 6%. With my guest today, Mish Schneider, who has a background with commodities, particularly agriculture. Be interesting to see what sort of contracts, what sort of information she's looking at as we think about this digesting of inflation and the big question mark that I think probably remains here. Cryptocurrencies all in the green. Not a huge update for things like Bitcoin and Ethereum, but certainly in the green. Bitcoin around 22,200, Ether around 1550, moving closer to that 1600 level. Let's look at a daily chart of the S&P 500 to continue our discussion about the markets today. Think about what we learned today relative to what's happened up until now. Now, last week we were talking about the breakout, or I guess the failed breakout for now, above 4,100. Right? We had sort of this nice move higher. Couple days in a row, a week before last, powering from around 4,000 up to almost 4,200. Last week, though, was sort of a distribution week, sort of retracing those previous gains. And then yesterday and today, sort of bouncing back above there. So that 4,100 level, which is the top area, the top of this blue shaded area here, I think is a pretty important level, right? As we broke up toward 4,200, you saw the RSI got to right almost exactly at 70, which is what we label overbought, basically suggesting it's gone too high too quickly. Most likely have a bit of a mean reversion at least to alleviate that overbought condition. And that's what we saw here in the last week. Now we're starting to rotate higher. Now, while the chart of the S&P doesn't necessarily maybe give you a resounding bullish sign because we're still sort of sitting on that 4,100 level. What's interesting is when you look underneath the hood and you see the consumer discretionary sector up, you see charts like Tesla moving higher. You see a lot of industrial names that have been, pulling back recently, now resolving to the upside. Could be a pretty encouraging sign, but our benchmarks are very much geared toward growth, particularly mega cap growth. So those charts work. And that chart's probably the chart of the S&P, the NASDAQ most likely are going to go higher. Yesterday, one of our 3 and 3 charts was looking at Microsoft and Apple and really just thinking about the message embedded in where they are at relative to their historical trends. Microsoft, of course, gapped above the 200-day moving average in early February and now continuing to rotate higher. Apple, same thing, a nice gap above the 200-day for now, holding that breakout, rotating higher, but Apple sort of down a bit, Microsoft up a bit, and that's what I think in general nets out to a flat day. I mentioned the strength in industrials. Here's Boeing, obviously a local company here in the Seattle area, continue to push higher. And what's interesting about this chart, in my opinion, one of the things is that once we broke above the 200-day moving average in November, look how we became overbought here in early November. We pulled back just a bit, but then resolved that uptrend and continue to go higher, bouncing off of 170. We again became overbought the beginning of January. We sort of were sideways and now potentially breaking out to the upside. What I would tell you is this chart of Boeing is a great illustration in that corrections or corrective moves can happen in one of two ways. It can be a price correction, meaning you had a big run and then you pulled back. Something like FLR might come to mind, right? Where you have these big moves and then sort of a price pullback of about a week before making a new high, a brief pullback, we make a new high, brief pullback, potentially rotating now off the 50-day moving average. Compare that to something like Boeing, which really didn't pull back, but it was more of a time correction, right? You have the rally and then sort of this consolidation, sort of this digestion. You had the big meal, you digest it, then we have another big meal, and then we digest it, and that's sort of how it moves higher. So remember that markets and charts on different timeframes can correct in terms of price, in terms of time, or in some cases a combination of both, right? It's a more protracted decline as there's a price correction and it eats up a lot of the clock as well. So Boeing is an interesting chart because it hasn't really had a deep price correction since the low at the end of September, but it has, I would argue, corrected. It's just been more time correction. So remember that those are two different things, but but also related, I think it's the way that you digest a big move. Now, within the industrial sector, there are a bunch of charts that look kind of like the chart of Boeing. Here's TDG, which is TransDigm Group in the same aerospace sector, aerospace industry. You have HEICO, HEI, RTX is Raytheon. So these are all the aerospace names. Many of these either at a new high or very close to one, but at the very least, making a higher low and rotating higher. And what's great about a lot of these charts is there's sort of a natural built-in stop. And when I say a built-in stop, I mean we've had a pullback and now we've resolved higher, which means the low of that recent swing can be at the very least sort of a visual stop. As long as we hold 96, this chart is still making higher lows, and that's probably encouraging. So potentially keep an eye on some of those recent pullbacks. I would also say within the technology sector, it's not all just about industrials or other things. Within technology, you have a number of names having pretty decent days. As I'm looking at the top performers in the S&P, Cadence Design Systems, CDNS is a large cap name in the technology sector, is in the software space. So same sector or same group as like Microsoft, for example. This one breaking out of a base, an over 1 year base. And when I talk about a basing pattern, what you basically mean is a move higher or a move lower, and then this sort of consolidation pattern, right? A basing pattern, think of it like a rectangle on the chart, right? A consistent resistance area, pretty consistent support level doesn't hurt either. And you sort of get this range, right? We sort of fluctuated in a pretty wide range from 135 to 195 for over a year. Now we've broken out of that range to the upside as today closing above 195. So the reason why basing patterns are important and why it's important to look for a validation in the form of a breakout is because what this is telling you is CDNS had a particular range, right? It had a valuation and then sort of over and undershooting that proper valuation, generally speaking. And now that we've broken out, something's different, right? Either new buyers are coming in, there's new information, there's something that's causing that price to go higher. That's a great opportunity to do some due diligence and understand the story behind the chart. But the chart a lot of times can be the catalyst to tell you something is new. NVIDIA is another one. As I was looking through my list of ratio charts, I saw the relative strength of semiconductors. One of the ratios I'd look at is just simply the SMH versus the SPY. Are semiconductors outperforming or not? And when semiconductors are outperforming, that tends to be a bullish sign, generally speaking. And I would describe it as semiconductors, think of them as sort of the backbone of the modern economy, right? They create the stuff that drives most of the things that we use, and not just your phones, but even things like your refrigerator and your toaster and all the other things that are now on the internet in some form or another. And they're driven by what's created by these companies. So NVIDIA breaking out, the SMH outperforming pretty consistently off of the October low is definitely a strong theme to be followed. Let's take a quick commercial break. We'll be back with today's guest, Mish Schneider of MarketGauge. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. We so appreciate you joining us every weekday after the close for our show. A couple quick announcements before we bring on today's guest. Mish Schneider, first off, we welcome your questions. We had a great mailbag segment on yesterday's show. We'll do another one at the end of this week, and we'd love to feature one of your questions live on the air. Our email is thefinalbar@stockcharts.com. We're on Twitter @FinalBarSCTV, and we are on YouTube. All of our shows are broadcast to our YouTube channel. Put a question below the video you're watching there, and we'll hope to answer yours live on the air on Friday's show. Just to let you know about the upcoming schedule, excited to talk to Mish Schneider here in a few moments. Tomorrow on Wednesday, the 15th, we have Greg Harmon of Dragonfly Capital coming to us from Cleveland, Ohio. On Thursday, February 16th, Sean McLaughlin, who's the chief options strategist at All-Star Charts down in Colorado. On Tuesday of next week, on February 21st, we have Danielle Shea from Simpler Trading coming back on the show. I want to welcome on today's guest, Mish Schneider. Mish is the Director of Trading Education at MarketGauge, coming to us from Santa Fe, New Mexico. Mish, great to see you. Welcome back to the show.
Thank you so much. Happy Valentine's Day to you and staff.
To you and Keith as well down there. Would love to talk about this market environment. We had the CPI number this morning. Inflation, I feel like, has been a word that many of us have had to live with and focus on very, very much recently. We get another data point, bringing it back to the forefront of our thinking. You have a couple charts to help us think through inflation, starting with silver. Talk us through your thoughts here.
Well, because there's so much talk from the Fed every day, and because we have so many indicators that come out on a daily basis with opinions ranging from a super cycle of inflation, which is the camp I'm in, to disinflation to deflation, I thought that I would bring 3 charts that would help people make their own decision about whether or not inflation is going to pick up. And this is regardless of whether or not we saw CPI get a little hotter. It still was in a decline. Food was excluded, but food prices have come off a little bit. All of this can make it very confusing. So there's a plethora of instruments to look at to determine, and certainly I didn't include DBA, and maybe we'll have a chance to look at that after we finish this, but certainly one of them is silver, and particularly the relationship between silver and gold. And I think the biggest argument that I get when I talk to people on Twitter about how I'm wrong about a super cycle inflation is by looking at the silver and gold saying they're just not moving. And of course, let's see what that means relative to what. And if right now, you really want to look at what silver is doing versus gold, number one. But if we just look at the chart, I gave you a weekly chart purposely, because if you like a drop to support, certainly a drop to the 50 and the 200 week moving average is, in a word, gorgeous. If you're a technical trader, you know right away if you're wrong, if it breaks down under those moving averages, although we do know that the metals have had a history lately of looking horrible and then being the best buy. But nonetheless, if they hold here, I think that's really good indication that we've seen a correction. And it's worked independently of the markets that have rallied on an expectation that the Fed would be less aggressive. This will really tell you whether or not all of that is working if silver holds here and starts to go up. And the other interesting thing is the middle chart, which is the leadership chart. And that is really how that price is performing relative to the benchmark. In this case, we use gold. Typical inflationistas will tell you that silver outperforms gold in an inflationary cycle, and there is a ratio level of 80 that it has to clear in order for people to think it's bullish. So you can see silver is not outperforming right now. So it seems to me like opportunity is there if you keep an eye on this. If silver starts to outperform, if it holds these moving averages, then you're good to go. And then, of course, if we look at the last chart, which is the momentum chart on the weekly basis, that too right now is certainly erring to the side of not so much for silver, but we know momentum can change very, very quickly.
Really interesting chart. And I love this one in the middle one. We often, and so often, we look at relative performance in some way measured to like the S&P or a major benchmark. This really thinking about silver versus gold is kind of an interesting way to do it, one that I hadn't thought of. I really appreciate that, Mish. Your second chart is looking at Latin America ETF, ticker ILF. What does this mean relative to the comments so far on inflation?
Well, we've switched here to a daily chart, so
Yep.
time frame is important. And, I obviously you and I have talked a lot, and most recently in January when we did the outlook and we talked about trading ranges and all of that. And people are used to hearing me talk about some of the more obvious commodities like we just did with silver. So I thought, let me look at a country that has 2 really interesting aspects to it. Well, actually, in this case, a continent, not a country, but it's the countries that make up Latin America are very oil rich and very agricultural rich. And as a result, right now, just like with silver, it's showing you that we don't have to necessarily worry, particularly in the energy and the oil market, at least not yet. So if you want to follow this, right now it's telling you that it held above the 50-day moving average. It's still below the 200. It's well underperforming now if we go to the middle, the real benchmark that we like to use, which is the SPY, although it's coming back to the Bollinger Band there. And if we go on the bottom, though, this is to me the most interesting. This is showing a divergence between price and momentum. And this is what caught my eye about this chart, because you can look at the 50 and the 200-day moving average on the momentum chart, and you see that the 50 is clearing the 200. So even though the price hasn't had a golden cross, the momentum chart is showing that it's having a golden cross, and the dots are above the moving averages. So that's telling you momentum is picking up, but price hasn't caught up yet. So if you were just looking at it as a typical trade, you would say if it clears the 200-day moving average, couple of days, that's a good signal. You have a good tight risk. But if you're looking at it with the eyes of When should I really start worrying about inflation? Put together with the silver and the gold. Look at this, because if it clears 26, it's telling you that these countries are starting to be able to get away with pricing their commodities even higher.
Right. So 26, that would take us above the January peak there, be a new high for the year. It's interesting when we're looking at something like Latin America, obviously a big commodity component to that area of the world and their economic conditions. But the dollar has certainly been a big part of the story outside of the US as well, right? Dollar had an incredible run through much of last year, really weakening recently, and now chopping around a little bit. How much, when you're looking at something like the dollar, how much of that is part of your thought process looking outside the US and whether or not something like that would be a good opportunity?
Well, that's a great question, because the dollar has relationships against commodities that are historical, and then times where the dollar breaks with the relationship with commodities. So right now, we're very much in the line of the dollar is weak, and therefore commodities have been able to go up along with equities. But there's a whole other factor that's happening with the dollar right now, and that really is the siege of fiat currency in general. And I think it's really interesting. You mentioned it at the top of the show about Bitcoin, that even with the market going down, Bitcoin is starting to do better. At least it's holding range more towards the top. And the fiat currencies right here, even though the euro has done better relative to the dollar, both are still under siege. And of course, then we have the Japanese yen and everything that's going on in Japan. But the biggest issue with the dollar that I'm watching is what happens with BRICS. Yeah, sure, BRICS story has been going on for 10 years already, but it's getting a lot of publicity lately as more and more countries want to be able to price oil, especially with what's going on with Russia, especially the countries that deal with Russia, where we have embargoes, and something else other than US dollar. So there's two things to look at. Yes, one is the relationship, and if the dollar goes up and commodities still go up, that tells you don't count on that relationship. Two is if the dollar really gets under siege and drops, obviously that's very inflationary. And three is if we start to hear anything more from a geopolitical standpoint about dollars not being used to price things like oil, that would not be a good situation for the United States.
A lot of question marks seem to remain no matter what here. Your third chart, just to finish up, Mish, is looking at natural gas. Now, a bit of an outlier in the commodity space, one that's been underperforming for quite some time. Talk us through this chart if you could.
Again, I tried to bring things that were somewhat controversial, that would support the argument of inflation, not so much, but yet would be really, really good to watch in case all those people turn out to be wrong. And natural gas is a great example, because one of the reasons why it went down so much was because obviously Europe had a much warmer winter and were able to really store up their supplies of natural gas. And so people were like, that's it, supply chain over, storage problems over, plenty of natural gas, we don't have to worry. And even myself didn't look at this chart really for a long time. We had this splendid run buying natural gas at around 7 and then adding at 11 and getting out at 17 and 18. And we haven't looked at UNG since. But it caught my attention because look at it now. It's flatlining, number one. Number two is if we look at the relationship there again against the benchmark of the SPY, it's not that far from getting back on par with performing against the SPY, possibly even outperforming, which it hasn't done, by the way, since September. And if we go down to the mean reversion or the real motion chart, you could see we had a mean reversion really actually back more towards the beginning of the year. And momentum has gone sideways. So if we take out the recent highs of momentum, it's possible that with the nice rounding bottom we're seeing in natural gas, it's giving us an early warning sign that everything that you're hearing about the complacency in terms of any future energy crisis, especially as Russia continues to might up, as we're hearing, don't again be so complacent about the idea. You put this all together, if you get oil-rich countries and agricultural countries and silver starting to pop up against the gold performance, and you start to see natural gas go up, I don't care what anybody says, it means the Fed is once again being caught behind the 8 ball and inflation will continue to rise.
This has been so helpful. We only have about 30 seconds left, but I'd love to just throw a random name. This is ExxonMobil, one that made a 52-week high going into the weekend. When you're looking at the energy space, it has had such a good run. I know with your background in commodities, particularly in agriculture and other areas of it, what do you make of this sort of sector that has had a run? Is it time to be looking for opportunities for pullbacks? Is this a trend that you see continuing? How would you play a name like this?
Well, yes. I mean, right now you have obviously the spike high and another period of digestion. And I would look back at the support that we saw somewhere in November, December at those highs right there, up near the highs there. That to me would be a good basis of a risk. I don't like to risk too much when you're buying these high momentum type stocks, but nonetheless, it certainly fits the narrative of everything we talked about, number one. And number two, oil exploration in general has been doing well. And there was a little comment made during SOTU, and I know I'm going over my time, but he said something about oil and gas, he being the president, for the next 10 years is going to be important. And maybe he's going to relax some of the standards of drilling. And if that's the case, you're going to get companies like Exxon that's really going to be able to take advantage of that.
Mish, this is awesome as always. Thanks for giving us some time talking through the charts. Stay safe and be well down there in Santa Fe. We'll see you soon, okay?
Thank you so much.
That's Mish Schneider. Mish is the Director of Trading Education at MarketGauge, coming to us from Santa Fe. The indicators that we were showing at the bottom there, by the way, the leadership and real motion are part of the MarketGauge proprietary plugins to our ACP platform. It has been so fun learning from Mish and Keith Schneider, how they drive these indicators, how they use them, and thinking about themes of leadership and momentum relative to all the traditional sort of what we call traditional technical indicators that we would use, like price and moving average and everything like that. I love thinking about inflation from different angles, and I hope you heard some of the ways. A lot of times there's question marks. We focus on the CPI headline or, sort of one angle to this. The commodity space gives us some opportunities to dig in a little deeper and think about what the price of silver, what things like Latin America, what they all mean relative to the broader commodity space and inflationary pressures. Great take there, as always, from Mish Schneider. We need to wrap the show, folks, and go to 3 and 3. Let's talk about 3 charts in 3 minutes that tell the story of this market environment. Here is chart number 1. Chart of NVDA I'm featuring today. NVIDIA, nice move to the upside today, up over 5%. And again, when I was looking at my list of ratio charts earlier today, the relative strength of semiconductors just jumped off the chart list at me. So I want to bring up some of these names. I was looking through some of the semiconductors, and the question I would pose to you really is, it's clearly in an uptrend. It's clearly moved very, very strongly here year to date. Really started back in last October. The momentum has turned positive. The relative strength has improved. We've completed an inverse head and shoulders pattern. We've made it above a Fibonacci resistance level. At what point on a chart like this are you drawn into it? And think about where a potential entry point would be. I found charts like this that are really starting to work. Look back and see how your toolkit would have or could have helped you get in at a lower level and ride this price higher. Great opportunity to learn from something that's really started to work. Chart number 2, great conversation there with Mish Schneider about the commodity space. She's one of the best at thinking about the relationship of commodities to other asset classes. Maybe dig into the gold and silver charts a little more. This was the gold chart I featured in my monthly chart review recently with my Market Misbehavior Premium members, looking at the rally higher in gold. Breaking down through a trend line is one of the most simple trend following devices, but can be really helpful to help you recognize shifts or recognize what I call a change of character. As of yesterday, gold testing an increasing 50-day moving average. Does that hold as the RSI tests 40? I think this might be an important chart to watch here through the remainder of this week into next. Finally, taking a step back or a couple steps back, this is the last 20 years of the ratio of the SPY to the TLT, literally stocks over bonds. My point is, from 2009 to now, we've had some pullbacks in this ratio, but overall it keeps resolving higher, particularly in the last couple of years since the COVID low. I would be inclined to assume that ratio continues until proven otherwise. Folks, that's a wrap for the show. I want to thank Mish Schneider joining us from MarketGauge in Santa Fe, New Mexico. All of our great interviews and conversations can be found at StockChartsTV.com. For StockCharts in Redmond, Washington, I'm Dave Keller. Be well, stay safe. We'll see you tomorrow. guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.